Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at AST SpaceMobile.
If you find our talks useful, please consider subscribe, like, and comment underneath. Okay, so today we are looking at a company that it honestly feels like it was ripped straight out of a science fiction novel. But when you look at the charts, the numbers are very, very real. We are talking about AST SpaceMobile. And looking at its performance, my jaw is essentially on the floor.
It is definitely one of the most dynamic stories in the market right now. And I think dynamic is probably underselling it.
Dynamic is a very polite way of putting it. We're recording this on Tuesday, January 20th, 2026. The stock is trading around $112.44. That is a 62% jump just since the start of this year. We haven't even finished January yet.
It's incredible.
And if you zoom out just 12 months, it is up nearly 387%. That's not normal market behavior. That is a rocket ship.
It is. And, the rocket ship analogy is quite literal here. But you have to look past the hype to understand what is actually fueling this engine. This isn't just a meme stock frenzy where people are buying it because it has a cool name. There's a fundamental shift happening in how the market thinks about global connectivity.
So let's unpack this. Because when I hear space stock or satellite internet, my brain immediately goes to billionaires launching cars into orbit. Or I think of that really expensive internet that requires me to bolt a massive dish to my roof.
Yeah.
But that's not what AST SpaceMobile is doing, is it?
Exactly. And that is the single most important distinction to make right off the bat. If you get nothing else from this talk, get this. Most satellite internet, think Starlink or the traditional providers, it requires proprietary hardware.
A dish, a terminal.
Right. You need a dish, a terminal, a receiver.
Yeah.
You need something physical to catch that signal. AST SpaceMobile is building a space-based cellular broadband network that connects directly to the phone already in your pocket.
Direct to device. No dish, no extra gadgets.
No special satellite phone that looks like a brick from 1985.
Just my regular smartphone connecting to a signal from space.
Precisely. They are essentially putting cell towers in low Earth orbit. And that just changes the addressable market completely. You aren't trying to convince people to buy a $500 piece of hardware and install it. You are just extending the coverage they already pay for.
That is a massive, massive difference in friction. And I think that explains why the analysts are just scrambling to keep up.
I saw a note from Deutsche Bank that really caught my eye. Usually when a stock runs almost 400% in a year, analysts start screaming, sell.
Or overvalued, yeah.
But Deutsche Bank isn't scared off.
Not at all. In fact, their analyst, Brian Kraft, he just updated his model. He raised the price target to $137.
And it was at 81 before.
It was at 81? So even after this massive run up to 112, he sees another, 18% upside roughly?
That is bold. What is he seeing that makes him think there's still gas in the tank after a run like this? It really comes down to the time horizon. Kraft is anchoring his valuation to 2030 earnings expectations. He is forecasting massive EBITDA growth. We're talking around 40% margins. The market is starting to price in what this company looks like when it's fully operational, not just what it is today.
So he's pricing in the success of the mission.
He's pricing in the probability that they execute. And if they do, their revenue potential is enormous because of that direct-to-device model we just talked about.
Okay, but I want to play devil's advocate for a second here.
Go for it.
Because whenever a company has a great idea, especially in tech, the sharks start circling. What is the moat here? What stops Elon Musk or Jeff Bezos from just aiming their satellites at my phone and eating AST's lunch? I mean, those guys have effectively infinite money.
That connects to the bigger picture of how the telecom industry actually works, legally. It isn't just about the technology, it's about the relationships and the licenses. AST SpaceMobile isn't trying to disrupt Verizon or AT&T. They aren't trying to steal their customers.
They're partnering with them.
They're partnering with them. It's a let's help them strategy. AST has secured agreements with over 50 mobile network operators globally.
Over 50?
Yes. We are talking about the biggest players on Earth. That is a huge competitive moat. These agreements create massive switching costs and lock in distribution.
Walk me through that. Why does that stop Amazon's Project Kuiper?
Because of spectrum. You can't just blast radio waves down to Earth on cellular frequencies without a license.
Yeah.
AT&T and Verizon spent billions of dollars buying those spectrum rights. By partnering with them, AST gets to use that spectrum.
Right.
If Amazon wanted to do this, they'd need to get those same carriers to agree to work with them instead. Or buy their own spectrum, which is, well, it's nearly impossible now.
Right. So for me as a subscriber, if I have AT&T and suddenly my phone works in the middle of the ocean or a national park because of this partnership, I'm never going to switch to a competitor that doesn't offer that.
Exactly. It creates stickiness. You don't have to sign up for AST service. You just keep paying your phone bill and your phone works in more places.
And that brings us to the total addressable market numbers, which are they're staggering.
They are. The TAM is roughly 5.8 billion unique mobile subscribers. Compare that to Starlink. Starlink is an incredible business, don't get me wrong,
Sure.
but they're serving around 9 million customers. 5.8 billion versus 9 million. The scale is just, it's just different when you integrate with the carriers.
That number is hard to wrap your head around. But having the contracts is one thing. Actually delivering a signal from space to this tiny little phone antenna, that sounds like a physics nightmare. Have they proven they can actually do it?
They have. And that brings us to the recent catalyst that really lit a fire under the stock. On December 24th, 2025, Christmas Eve of all days, they successfully launched the Bluebird 6 satellite.
Bluebird 6, was this just another test?
No, this was a major leap forward. It represents a 3-time size increase and 10 times the capacity compared to their previous models. It proved that they can build and launch the massive hardware needed to provide density. Capacity is the name of the game here. If you want to serve millions of people, you need big, powerful satellites. Bluebird 6 showed the market they can build them.
So the tech works, the partners are signed up, the market is huge. But here's where it gets really interesting, or maybe really scary. We have to look at the financials. They aren't actually making money yet, are they?
Well, they're making a little bit, but relative to their costs, no. They are still firmly in the pre-revenue phase. They reported revenue of about $18.5 million, which sounds decent until you see the net loss is over $303 million.
Ouch. $300 million in the hole. That burns through cash pretty fast.
It does, and for a long time that was the bear case. Critics said they're going to run out of money before they get the constellation up.
Yeah.
But looking at the balance sheet now, that argument is getting much, much harder to make.
How so? What changed?
They secured $1.2 billion in cash through a convertible notes offering, and it's not due until 2036.
$1.2 billion.
Yep.
That buys a lot of rocket fuel. And 2036, that is 10 years from now.
Exactly. It buys them time, which is even more valuable than fuel. If you calculate their runway based on their current burn rate, they have about 3 to 4 years of cash.
So it bridges the gap.
It bridges the gap. They don't need to be profitable tomorrow. They just need to survive until that commercial inflection point, which is projected for 2027.
That's a massive safety net. And I noticed something else in the notes about their debt. They did something clever, right?
They did. This is the kind of detail that gets overlooked, but it shows management is being smart with their capital. They repurchased $50 million of convertible notes that were due in 2032. By doing that, they removed about $13.5 million in annual interest expense.
That's $13 million a year they don't have to pay out. That's smart. It shows they're not just spending wildly.
Exactly. It signals prudent capital allocation. They have the war chest, and they are managing it carefully.
Okay, so financially they are stable for now. Let's look at the stock itself again. We mentioned it's at all-time highs. Technically, is it overheating?
It's a valid concern. The stock has broken out way above the average analyst target of, what, $60.80? If you look at the technical indicators like the stochastic RSI, it is above 80. In plain English, that means it's overbought.
Overbought usually means a pullback is coming.
Usually, yes, but you have to contextualize it. Sometimes the stock is overbought because the fundamental reality has changed, and the price is just playing catch-up. This momentum isn't just hype. It's driven by real news contracts, launches, cash. The Alpha Vantage sentiment score is 72% bullish.
So it's not just retail traders pumping it then?
Well, retail is definitely involved. It was a top 5 stock on Wall Street Bets recently, but there is smart money involved too. And this is a signal I always look for.
The insiders?
The insiders. Specifically, a director named Keith Larson. On December 10th, 2025, he bought 675 shares.
Okay.
Now, that's about $49,000. Not a massive fortune for a director, maybe, but look at when he bought.
December 10th. That was right before the Christmas Eve launch.
Right. He bought during a dip, before the big news. That is a classic conviction signal. You know, as the saying goes, insiders sell for a million reasons, but they only buy for one.
They think it's going up.
He put his own skin in the game when the stock was showing weakness.
I love seeing that. And it's not just insiders validating the tech. The government is getting involved, too.
Yes, and this is another layer of that moat. They were awarded the SHIELD contract from the Missile Defense Agency.
Missile defense. Okay, that sounds serious. That's not just for watching YouTube in the desert.
No, it isn't. It adds a layer of defense revenue diversification. It means the U.S. government sees strategic value in this network. It's about secure, resilient communications. Having the Pentagon as a client that tends to help you sleep a little better at night, it essentially stamps the technology as too strategic to fail.
Absolutely. Uncle Sam is a pretty reliable customer.
Yeah.
So let's reset. We have the cash, we have the tech proving itself, we have the government backing. But what do we need to watch right now? If you're an investor looking at this today, what are the dates circled on the calendar?
The next 3 months are what I would call the do or die schedule. It is going to be incredibly intense.
Why? What's the rush?
They have an immediate milestone.
Yeah.
They need to complete 5 satellite launches by March 31st, 2026.
5 launches in? Wait, that's about 2 months from now.
Yeah.
That's a launch every 2 weeks, roughly.
It is an extremely aggressive pace. Spaceflight is notoriously prone to delays, weather, mechanical issues, you name it. But they need to hit this cadence to meet their goal of having 45 to 60 satellites in orbit by the end of 2026.
So the clock is ticking. This isn't a we'll get to it when we get to it kind of situation.
No. If they hit these targets, that is the green light for commercial-grade service to start in 2027. That's when the real revenue turns on. We are talking 24-hour coverage in the U.S., Europe, and Japan. But if they miss, delays push that revenue to 2028 or beyond, and the market will punish them.
So March 31st is the finish line for this current sprint. Anything before that?
Q4 earnings are expected in late February. Now, I wouldn't expect a revenue surprise there. The numbers will still be small, but the guidance will be critical. You need to listen for updates on that launch schedule. If management sounds confident about the March deadline, that's bullish. If they start hedging, watch out.
Okay, let's summarize the risks here, because despite all this good news, investing in a space company is, well, it's not a savings account.
Far from it. The execution risk is rated high GH. Launching satellites is hard. Integrating with 50 different carriers is hard. A rocket could blow up on the pad.
And the valuation.
The price-to-book ratio is 25.5 times. For context, their peers trade at around 6.6.
25 times book value. That is priced for perfection.
It is. It means the market has already baked in a lot of success. If they stumble, the valuation compression could be brutal.
And what about competition? We touched on Starlink and Amazon.
Amazon Kuiper is the big shadow, their previewing service. But again, they seem to be targeting the consumer broadband market, the dish on the roof model. It's not the carrier integrated model AST is using, so they aren't necessarily playing the exact same game yet.
It really feels like AST has carved out a very specific, very lucrative niche. So, taking all of this in, what is the final verdict? How do you score this?
It's a tough one, but I'm giving AST SpaceMobile a bullish score of 7.5 out of 10.
7.5. That's strong, but you're keeping some powder dry.
It reflects the balance. The potential is massive. We're talking about connecting the unconnected half of the world. But the execution risk is real. You can't ignore the difficulty of what they're trying to do.
So what's the play here for the listener?
I see 2 distinct strategies. For the short-term trader, there is a swing trade opportunity leading into that March 31st launch deadline. The momentum is there. You could target that $125 to $137 range as the hype builds.
Ride the wave of the news cycle.
Exactly. But for the long-term investor, the wealth-building play, this is a hold through 2026. You have to be willing to stomach the volatility. You're holding for the deployment of the full constellation.
You're betting on the 2027 revenue inflection.
Right. The bottom line is this. It's volatile, yes, but that $1.2 billion cash cushion and the success of Bluebird 6 make the risk-reward ratio very attractive for growth investors. They have money to finish the job. Now they just have to do it.
High stakes, massive potential, and a literal race against time to get those satellites up by March.
Right.
It's going to be a fascinating few months to watch.
It certainly will be. And remember, while the technology feels like sci-fi, The investment thesis is actually very grounded. It's about carrier partnerships, recurring revenue, and solving a problem that affects billions of people.
Connectivity is the utility of the future, just like water or electricity. And here is one final thought for you to mull over. We've talked a lot about phones today, but think about what happens when every car, every shipping container, every drone, and every sensor in the middle of nowhere can stay connected globally without expensive hardware. The phone market is huge, 5.8 billion people. But the Internet of Things market, that might actually be the bigger story for AST in the long run. Are we valuing them as a phone company when we should be valuing them as the nervous system for global logistics?
That is the trillion-dollar question, and it's why the stock is so fascinating to watch.
Well, that's all we have time for today. Thank you so much for tuning in to Smart Wealth with Joshua. We hope this helps you navigate the stars and the charts.
Happy investing, everyone.
See you next time.